Jahangir Aziz of JP Morgan joins us right now on the phone line. Jahangir, so good having you. Thank you so much for taking the time out and speaking to us.
Sure.
Jahangir, is it possible to even try and second guess when would either the economic impact or the financial impact pause?
Look, I think we are trying our best to try and gauge what will be the impact. I think enormous amounts of the uncertainty lies in the fact that different countries at this point in time have completely different containment measures. So if you look at what China did, and if China is a template, then what we really need is a global lockdown outside of China, Taiwan, and Korea, which have already gone through it. And in that case, we will be able to stop the spread of the virus, and in which case we can make an educated guess as to how long it will take and therefore what will be the impact of that. But if you look at what countries are doing, countries are going through, various forms of containment measures, and therefore it becomes very difficult. On the back, having said that, we are expecting China to fall by quarter on quarter on an annualized basis by 40% in the first quarter, and then recover to about 50-55% in the second quarter because, this is a viral attack. This is not an earthquake which destroys capital. So once the virus is brought under control and the restrictions are removed, as it's happening in China, you can get back output very, very quickly. Service sector will lag, but you can get back a reasonable amount of output. Given the fact that the rest of the world is just entering into this, the outbreak, we are expecting in the second quarter Euro area to drop by about 22% and US to drop by about 14-15%. So these are going to be very large declines. But again, much of the uncertainty is because different countries have different containment measures.
Jahangir, good morning to you. We've been seeing a lot of assessment on the damage, particularly in India. We were probably on our way to starting to see a little bit of green shoots with regards to the economy picking up, and that's now been put to the back burner. For the Indian economy particularly, what is it that's most worrying to you? And are there any streaks of silver lining that you see, whether it be in terms of the agriculture output, because the expectation was that the Rabi season would be really good this time around, but obviously all that now seems to be very small in terms of the larger problem.
Look, I think the biggest worry is that India, too, is hesitating about the options that it has in responding to the virus. We do know that if you shut down the economy for 2 weeks, the cost is going to be significant, but it is going to stop the spread of the virus. If we don't do that, and we are still continuing with these experiments with voluntary shutdowns for 1 day, and that too on Sunday, to me, it doesn't really seem that, we have learned the lessons from other countries, particularly, Italy, for example, which did not put in the containment measures early on and now has a, death count which is larger than that of China. I think the second thing that we are underestimating, that the part of the economy in India particularly, that will get affected if social distancing is imposed, and it will be imposed sooner or later. That part of the economy is very, very large. We're talking about tourism, retail sales, construction, and manufacturing. And therefore, the impact is going to be significant. And therefore, the economic measures that one needs to take, it has to be commensurate with that. I really don't think that policymakers are even thinking about in any way close to the kind of numbers that we are estimating or forecasting for countries like US and UK and Euro area. So what I'm afraid is twofold. One is that we still haven't put in a national lockdown. And therefore the disease is spreading as we speak. And second is that, I don't really think that the numbers that I'm looking at people are branding around in terms of what can be the potential impact. That is anywhere close to the kind of potential impact we've seen in other countries.
All right. 75 districts are going to lockdown from today till the 31st of March. But point taken, it's a big country, 1.3 billion people. And this is a big worry. But Jahangir, you spoke about policymakers and them not being able to factor this in. How much right now we've seen the US, we've seen the Fed bring rates down to near zero. They're sort of running out of ammo right now. And they're trying to tackle this issue by pumping in more liquidity into the system. Is this the right approach?
I think, there is monetary policy and there is fiscal policy and public health policy. Monetary policy cannot replace what fiscal policy and public health policy can do. This is primarily a public health issue and primarily a fiscal policy issue. So if those two things are not actually functioning, or at least not really responding the way they should be responding, whether that's in the US or in India, then monetary policy is being forced to carry most of the burden, then monetary policy can do this much and no further. Monetary policy cannot really be a replacement for public health policy or for fiscal policy. So I think that in terms of what the Fed has done, it has done what it can do. And most likely you will see the Fed doing many more creative things as the days go by in terms of liquidity provision, in terms of, regulatory forbearance, reducing the risk weights, et cetera, et cetera, et cetera. But there are limits beyond which monetary policy is being asked to solve problems that it cannot solve at this point.
Yeah. Jahangir, a lot of people are trying to find some silver linings as to when this is over. The fall of crude prices, for the example, and the impact not just on India, I mean, all consuming countries,
right.
And the fact that monetary policy is providing ample liquidity. Are these even talking points in your head right now, or they will get to your column only once, we find some bit of a cure which can contain this?
No, I think. Look, we are again, looking at this, and as I said, I mean, we are. What is worrying is that the different pace and different forms of containment measures that's being done. But at the end of the day, this ultimately it will pass, and it might pass with devastating impact on people's lives. And it will be tragic, but at the end of the day, it is not going to destroy capital. This is not an earthquake that destroys capital and requires things to be rebuilt. Capacity will remain exactly the same as it was before and after the crisis. So you can very, very quickly ramp up. And I think the key to all of this right now is to see what happens next month in the data flow that comes out of China. If China shows that it can actually ramp up production, ramp up retail sales, doesn't have to go back to old levels, just ramp it up without easing containment measures to a point where there's a recurrence of the virus. So the key is, can China recover in the next two months without the virus recurring? I think that will show that there is a template to how this virus can end, how this outbreak can end. And I think you will see, surprisingly, that the financial markets react extremely positively once we get the China story done. And I think that's the biggest marker. The biggest marker is that in the April data flow, do we see enough evidence that in March, in the last weeks of March, we have seen a ramping up of Chinese production without the big proviso is that can China do that without, opening itself again for another round of the outbreak?
Sure. But, Jahangir, your point very well taken in terms of watching out for what China does. But from a financial market standpoint, it's not about just when China starts, to open up in terms of its production and ramping up. We are already factoring in a complete wipeout in terms of earnings and growth for corporate India. Now, that is going to take some time to come back in and confidence to build back in from a financial market standpoint, despite of what China does. Do you feel then that for a financial market recovery, it could be very different from what the economy does in terms of recovery?
No, I think that financial market recovery will be looking at what is the template. So what is the amount of destruction that can happen and how quickly can it go? Right now, the financial market is absolutely in panic mode because of the fear that we do not know the depths to which this collapse can take place. We have no idea how far deep this hole can go. And I think that's the worrying part. There is nothing that says that this is it and beyond this, it will not fall. Once we have that sense, that there is a bottom to all of this, I think the financial market will start recovering. What is critical, and you noted that, what is critical is that while this massive adjustment is taking place in growth, and we are getting, and there will be recovery, maybe 2 months later, 3 months later, sometime the recovery, in this period of time, we do not do things that permanently damage households' balance sheet and firms' balance sheet, particularly SME balance sheet. And that requires the government to have announced long time back. And I'm again very surprised the government still hasn't come up with anything in terms of economic support to support the economy while this adjustment is taking place. And the support has to be that the balance sheets of households and balance sheets of firms are not destroyed. And that essentially requires significant amount of cash transfer and income transfer, both to SMEs and to households, and corporate tax and other such measures, this thing to the big corporates. But income transfers, I think, is essential at this point in time.
Well, let's see when all of this happens. Jahangir Aziz, very pertinent points. Thank you so much for staying up this late and talking to us. Appreciate your time.